Good morning, everyone. Hope you all had a great weekend. We are at a time of year where normally risk is taken out of the market as the crop gets into the ground and starts to develop. That takes risk out. We got the crop in. That usually affects prices. However, this year, against the good planting progress and good forecast for rain in most of the Midwest, we do see some risk on the fringes, Nebraska, South Dakota, some dry areas along the Atlantic coast. So we have risk in weather, but minimal because the heart of the Corn Belt looks really good and planting progress looks really good. Normally, fundamentally, we would see prices move down. Complicating matters this year is, of course, the geopolitical risk, and I see that risk expanding. Iran said no to the U.S. deal. I believe the fanatics of Iran are going to stick this out as long as they possibly can, and that probably means more conflict ahead of us, which is not what I expected last week with President Trump wanting out of that war. At least that's how it appeared to me. So bottom line is we have some real risk geopolitically. We have a lot of crude oil that is not being shipped because of the conflict in the Straits of Hormuz. What does that mean? We have this huge stockpile of floating crude stock, right? Huge. What happens if the Straits of Hormuz opens up? That crude moves out of the straits, goes to its destination, and the world's flooded with crude oil. We will see a sharp drop in crude prices if that happens. We got so much backed up supply, it's phenomenal. The world's adjusting to higher prices by cutting demand. The world's adjusting to the problems in the strait by looking and getting crude in other places. That's not going to end overnight, but the availability of crude, if the Straits of Hormuz opens up, will, right? Those ships will move. And all of a sudden, we have a big surplus of crude oil. What will that do to prices? Hopefully, demand won't be destroyed at that point where demand can come back quickly and absorb that. Bottom line, a lot of unknowns with this war. We don't know what's going to happen, and that puts risk back in the market. So we got fundamentals looking good, negative for prices, geopolitical stuff looking bad, supportive for prices, and we got that battle going on. The best strategy is what we're doing right now. Cannot use cash sales to both hedge and be long, but you can use the hedge account to have a safe fixed risk hedge and something higher to protect bull against a bull move. We can do both of those, okay? That's what we're looking at doing here at Hedge Plus. If you have any questions or you want to see what we're doing, give us a ring. Have a great week, everyone. Thank you.